A special thank you to each of our subscribers who make this channel possible. Here's today's story. In a move that could reshape the landscape of property ownership in the UK, Chancellor Rachel Reeves is considering the introduction of a capital gains tax on the sale of houses valued over £1.5 million. This proposal comes as part of an ambitious plan to fill a staggering £40 billion hole in the public finances. Currently, the sale of a primary residence is exempt from capital gains tax under a policy known as private residence relief, but this could soon change. Under the proposed changes, higher-rate taxpayers would face a 24% tax on any gains made from the sale of their homes, while basic-rate taxpayers would be liable for an 18% tax. According to reports, the £1.5 million threshold would affect approximately 120,000 homeowners, resulting in capital gains tax bills averaging around £199,973. However, experts have raised concerns that this threshold could create a cliff edge effect, where property prices for homes just above this threshold may increase as sellers factor in the new tax. This could lead to a slowdown in the housing market, particularly impacting older homeowners who are looking to downsize. Anisha Beveridge, head of research at estate agency Hamptons, emphasized the potential long-term consequences of this tax, stating that it could deter long-term homeowners from selling their properties, dampening market activity, and potentially affecting house price growth. A Treasury spokesperson has defended the government's approach, stating that the best way to strengthen public finances is by focusing on economic growth rather than solely relying on tax increases. There has also been speculation about implementing a proportional property tax on homes valued above £500,000, which would aim to replace the current stamp duty and council tax systems. However, this proposal has faced skepticism from government sources. The pressure on Chancellor Reeves to introduce more wealth-based taxes has intensified, particularly from Deputy Prime Minister Angela Rayner. The National Institute of Economic and Social Research, NIESR, has warned that taxes may need to increase by more than £50 billion to cover costs and restore confidence in Labour's fiscal plans. As the Chancellor prepares for the upcoming autumn budget, the challenge of balancing public spending with tax income remains a pressing issue. With Labour's manifesto pledge not to raise taxes on working individuals, the government is left with limited options to address the financial shortfall. The economic implications of these potential tax changes are significant, with analysts suggesting that the government could be on track to breach its own borrowing rules unless substantial measures are taken. The proposed capital gains tax, if implemented, would mark a major shift in the taxation of property sales, impacting the housing market and homeowners across the UK. As the nation awaits the autumn budget, all eyes will be on Chancellor Rachel Reeves and her decisions regarding the future of property taxation in the UK. That's all for this story. We upload videos every day covering many different subjects, so hit that subscribe button to stay informed. Thanks for watching.